You've seen it, I've seen it, we've all seen it. You're scrolling, and then bam, a stock just defies gravity, jumping some insane amount in a single day. And that urge, that temptation to jump in, it's powerful. But what if that giant green number is actually hiding something? Well, let's put on our detective hats and dig into the real story behind this spike.
And there it is, the number that makes you stop dead in your tracks. Over 40% in one day. Your brain is probably screaming, I gotta get in on this. This thing's a rocket ship. And yeah, it's exciting, it's dramatic, and it's practically designed to get that exact reaction out of you.
But this is exactly where we need to hit the brakes and think like an investigator. Because a move this huge, this fast, it forces us to ask one really critical question. Did we just stumble upon the opportunity of a lifetime, or are we about to walk right into a carefully laid trap?
Okay, so let's start with the main event itself, that flashy 40% price spike. It's the loud noise, it's the bright light, it's the bait. Now we're going to look past that price to find our very first clue.
You know, in any good mystery, things are never quite what they seem on the surface, right? You're always looking for that one little detail that just doesn't fit, that piece of the puzzle that feels off. And believe me, in the world of finance, the most powerful clues are almost always found in those contradictions.
And that brings us to our first major piece of contradictory evidence. It's a classic known as the volume trap. This is the moment where we stop looking at the price tag and we start following the actual money. So where did it really go?
Okay, check this out. This is where it gets really wild. On the left, you've got the price story everyone sees, this incredible 40+% gain. But look at the right. That's the money story. While the price was shooting for the moon, more than $5.5 million was actually flowing out of the stock. That, right there, is the contradiction we were looking for.
So this whole phenomenon, it actually has a name. It's called a volume trap, or a bearish divergence. And I love this analogy here. The loud music? That's the 40% price spike, making it seem like this is the hottest party in town. But the money flow shows you that the really savvy people, the insiders, they're already quietly slipping out the back door while no one's watching.
All right, so we have our first massive red flag. But any good detective knows you never, ever rely on a single clue. You've got to find more evidence. So let's dig into some other hidden signals in the technical data and see if they back up our suspicions.
Let's treat this like our evidence board. First up, the RSI. That basically measures the stock's internal strength or momentum. A reading of just under 36, that tells us that even with that huge price jump, there's really no muscle behind the move. It's weak. Then you've got the Tdic RSI, which is maxed out at 100. That means this little buying frenzy is completely exhausted. It's overheated. So what's the big picture? A fundamentally weak stock that's running on fumes after an unsustainable spike.
Okay, let's just recap for a second. The price went through the roof, but millions of dollars actually left the building. The stock's underlying momentum is weak, and the spike itself is totally gassed out. You know, when you see all of these specific clues lining up perfectly, it's usually not a coincidence. It's the signature of a very specific and very deliberate kind of play.
And that play has a very famous name in the financial world, the pump and dump. This isn't just the market being weird, it's a classic manipulation scheme designed specifically to fool people and lure them in at the worst possible time.
And hey, you don't even have to take my word for it. The source analysis for this stock gives a brutally honest verdict. It calls this extreme speculation and, even more bluntly, a trap. So the data itself is practically waving its arms and screaming a warning at us.
So how does a trap like this actually work? Well, it's usually a pretty simple three-step playbook. First comes the pump, where a group of people works to artificially drive up the price. Then comes the hype. This is where everyone else gets that FOMO, that fear of missing out, and they start buying in, pushing the price even higher. And finally, the worst part, the dump. The original group sells all of their shares to the newcomers at the very peak. The price crashes, and the new investors are left holding the bag.
All right, we've seen the evidence, we've identified the trap. So what happens now? Let's look at where the stock might be headed and what the final verdict from our little investigation really is.
This chart lays out the risk versus the reward crystal clear. The current price is sitting around 39 cents. The absolute best case scenario, the bullish case, might push it to 45 cents. A pretty small gain. But the bearish case, where the price collapses back to reality, that could take it all the way down to 32 cents. The potential loss here is just so much bigger than the potential gain. It's not a good bet.
So let's just boil this all down to 3 really simple takeaways. Number 1, the flashy headline number, that big green percentage, it almost never tells the whole story. Number 2, a rising price combined with falling money flow is one of the biggest red flags you can ever see. And number 3, always look for multiple clues that confirm what you think is happening before you ever make a move.
And that just leaves us with one final thought. Now that you know how to look behind the curtain, the next time you see one of those stocks with a dizzying, unbelievable price spike, what's the very first thing you're going to check? Besides the price?